Good morning, everyone. Welcome to this weekend update for global stocks. And as you can see from the title, the message I want to get across this week, and we are into the American reporting season, which is going along quite well, is that despite some terrific rises in share prices, there is still great value in America and in other parts of the world. So a lot of people tend to think just because prices have gone up for a long time that it's nearly all over. But it's always relative to the profits the companies are producing. And at the moment, if you know where to look, there are still some terrific opportunities in America. And I want to show you one of those today. So let's jump in and have a look. The S&P index was a little bit wobbly during the week. Obviously, the tragedy over the Ukraine caused markets to get a bit nervous, but in a reflection of just how much underlying strength there is in markets at the moment, the S&P immediately bounced back on Friday and is back very close to record highs. So we had a couple of minor disruptions that were really only a day. One was to do with the Ukraine, and the other one was to do with Israel and the Gaza Strip. But these are only short-term impacts on markets, and the fundamentals are still very strong. So the S&P index ended up rising by 11 points on the week, which is not too bad. And as I said, reporting season is going along quite well. The majority of stocks that have reported so far have exceeded the expectations for profit and revenue. And as I said, there is still some fantastic value that's available. And I want to touch on a stock called Skyworks. Now, I'm not going to do this as a regular feature. This is the information that I provide to members of our group, obviously. But I just want to paint an example for those perhaps that aren't familiar with the American market, just what is available over there. So this example of Skyworks is a one-off if you're a non-member of Specialist Share. So what they do is they manufacture semiconductors which get used in mobile devices and a whole array of other applications, which is just really exploding. Now Skyworks have over recent quarters in particular been ramping up their profits at quite a dramatic rate, well beyond what analysts were expecting. And they've done it again in this quarter with earnings up 54% and absolutely smashed through expectations. And as you'll see from the share price chart, it was certainly way beyond what the market expected. Importantly, their operating margins rose to 30%, which indicates that not only are they increasing revenue, but it's also becoming more profitable. And their forward outlook was also very robust indeed. So the future looks terrific for them. And basically what they're doing is they're capitalizing on this massive trend that's underway, and it's going to continue throughout the rest of this decade, to basically connect everyone and everything on the planet constantly, if that's what is required. And at the heart of all this, of course, is semiconductor technology. Now, just quickly looking at the financials surrounding Skyworks, they're a $10 billion market cap company, which puts them in the top 25 in Australia in terms of size. So even though you may not have heard of them, they certainly are a company of some substantial substance. Now, earnings per share grew at 29% per annum over the last 5 years, and that's quite stunning. There aren't very many companies in Australia that have that sort of growth rate. And if they do have that sort of growth rate, then generally the price earnings multiples are extremely high, generally well in excess of 20 or sometimes 30 times. But in the case of Skyworks, the forward price earnings multiple is still only 14 times, and it's probably less than that, because that 14 times is based on current analyst forecasts. And as we can see, the company is just absolutely smashing analyst expectations. So it's quite likely that the true forward PE is something more like 10 or 11, which is just excruciatingly cheap for a company that's growing its earnings at the rate that this one is and has the sort of outlook that this one does. And this is the whole point about investing and trading in America. There are things you can do there that you cannot do in Australia. They're just not available in Australia. So my message this week is to try and snap you out of this comfort zone of just being in Australia. There are opportunities overseas that just far exceed what we've got here. So let's have a quick look at those couple of charts. So first of all, we'll start with Skyworks, and then we'll go back and look at the S&P 500. So this is the chart. Let me pan back and give you a bigger picture view. So the stock had rallied strongly into 2011 and got up to just under $40. Probably got pretty well ahead of itself at that stage because it had run from $4 after the GFC to nearly $40. So it had gone up nearly tenfold. Got ahead of itself, pulled back, went into quite an extensive period of time while the fundamentals of the business basically caught up with the share price. So basically from around April 2011 to around January 2014, the share price just fluctuated above and below a mean point. But the price started moving really started to move probably in late 2013. I initially bought some shares in Skyworks at around $21. And it really, since then, has gone from those low 20s, and you can see now the stock is trading at around $53. Now, I added more at 30, around the $31 mark, and then I added some more around the $44 mark. So I've had several bites at this particular stock because I think the fundamentals are absolutely outstanding. So even in the last 6 months or so, the stock has basically doubled. So it's been a sensational performer, and as you can see, the news on Friday night of their profit was greeted very warmly by the market. Big gap and a huge push on, and you can see tremendous volume on that session as well. Now there are plenty of stocks like Skyworks. I certainly wouldn't be buying into it now if you don't already own it. But there are plenty of stocks like Skyworks if you know where to look. And I've been doing a huge amount of research on America for 18 months now. And there really are quite a lot of these sort of opportunities unfolding. Let's move on to the S&P. So you can see the last 2 weeks, we've just really had a high-level consolidation of the index. It's tried to pull back a couple of times. We had a bit of a dip on Thursday after that tragic news, but it just turned around and went straight back up again on Friday. So there's unquestionably strong momentum, and so far the reporting season is strong enough to support what's happening there. Let's look at Aussie stocks. The ASX 200 index ended up being up 45 points for the week. It was a bit more of a timing issue than anything, and it erased the previous week's losses. But it is still just stuck within this range between 5,300 and 5,550. And given the valuations of the major stocks, the banks, Telstra, BHP, Rio, it's really hard to see, beg pardon, it's really hard to see what might propel the ASX 200 to move outside that range. Let's have a look at commodities. Gold ended up losing $28 on the week. But look, you've got to look at gold and other commodity prices with this thought in mind, and that is that they tend to take 2 steps forward, 1 step back. That's just the way it works. It's perfectly normal. So, don't be disillusioned if gold keeps having these sharp $30 and $40 pullbacks, because it's absolutely normal. It's just the way that commodity markets function. The encouraging thing for me is that gold stocks on a global basis are still outperforming the price of gold itself, and they're still outperforming the S&P 500. And they are the key indicators of a new bull market which is imminent. So I still remain extremely positive on gold stocks in particular. Silver still moving in tandem with gold. They're basically just going up and down together. Copper slipped back a little bit to $3.17, but that was really just about the US dollar. US dollar rose a little, and that pulled the price of copper and gold, and and also nickel came back as well a little bit. Crude oil rose to 103 with some of those tensions in the Middle East. So there's the spot copper chart. You can see a bit of a retracement during the week, but still basically holding pretty healthy levels. Now this week I just wanted to also cover off on the spot nickel chart as well. So there's the chart of nickel. You can see it's had a huge rise from just over $6 and got to over $9. So it went up about 50% in the space of 3 months. And that's on the back of bans in Indonesia about the export of the commodity itself. So that's why nickel stocks have been doing really quite well in Australia in recent months. Now let's look at a couple of charts. We'll start with the gold chart, and this is on a weekly basis. So you can see we're still in this big phase 1 base. Might seem like it's not doing anything, but as I've said before, the indications from gold stocks, which tend to lead the price of gold, are looking pretty positive. If we just look at this on a daily basis, you can see we had a couple of very strong weeks, then we had a sharp pullback on Monday and Tuesday, and then a partial recovery into the close. Silver looking fairly similar. Now let's have a look at the GDX index. So it is also still in a big phase 1 base, but it is outperforming the price of gold, and it is outperforming the S&P 500 index. And this is the junior gold miners index as well. So good positive signs there. Now, just from an overall strategy point of view, global stocks still outperforming Australia. Wherever you look, that is very much the case. China is probably the only stock market that's not outperforming Australia, but most of the others are. And that's for the reasons that I mentioned before, that you can buy high growth stocks and you can buy them at exceedingly cheap valuations, despite the fact the share price might have gone up 50% or 100% in the last 6 months or a year. Now, I'm expecting stocks to be positive for the next 2 to 3 years minimum. Now, the reason that I say that, and the reason that I have so much confidence around that, is because there's no way that the central banks of America or Europe or Japan or the UK can think about starting to raise interest rates for quite a lengthy period of time. There's 2 parts to that, but the first one is that a raise in interest rates is going to interfere with the economic recovery, so they're not going to do it from that perspective. And secondly, there is still a threat of deflation. So interest rates are really only going to go up if governments start to get worried about inflation, and it's pretty hard to see that occurring at the moment. And there is a third one, of course, and that is that with governments so indebted, if interest rates start to go up, then their cost to service that debt just starts to skyrocket. So for all sorts of self-interest reasons, I can't see governments and central banks starting to raise interest rates. Now, at some point, interest rates will probably have to start to move up, but even after that, you've probably got 6 months or a year before it starts to impact on the stock market. So I remain extremely positive about not stocks in general, but about the sentiment around the stock market, and if you know where to look, to pick off the sort of stocks like Skyworks that I showed you before. Outstanding value and a lot of money to be made. So my message is, go where the momentum is. Don't get stuck with what you feel comfortable with. If you've only ever traded or invested in the Australian market, then your opportunities are so limited compared to what's available overseas. So I'd really encourage you to start thinking about, in fact, not just thinking, but actually doing something about getting some exposure to these wonderful opportunities overseas. It's going to make an amazing difference to the rate at which you can accumulate your wealth. Now, you've got a couple of alternatives. This message for non-members, you can join our group and I can either help you do it yourself with all of the research and support, or if that's not really your bag, then I've also got a facility where I can do it for you. But whichever way you go, please take the opportunity to go where the momentum and where the opportunities are. If you'd like more information on what we do, there's our website address, and I'm always happy to communicate with members and non-members as well. There's my email address there. That's it for this week. It'll be a bright start on Monday for the Australian market, and the signs remain pretty good. Cheers.